Hi, I'm Peter Rose, founder of Longwood Currency Trading, and I wanted to talk about us as Forex traders and starting over after a bad loss, or at least maybe just rebooting ourselves in our trading. In one of my last videos, I talked about that process of loss and the acceptance of loss and how you manage that and all that sort of thing. But what comes after that? We're still left with this feeling of failure when we take a loss. And I talked about that in that last video. And if I remember, I'll leave that in the show notes below. But in discussing our trading, we accept that there's losses. Unfortunately, what happens sometimes is we'll do something stupid, right? And boom, we'll take a 20% hit against a bank or something like that, or worse, which is what I discussed in that other video, is those planet killer trades that just take 60% of our account. But a 20% loss is severe. I mean, you're going to have to make, I don't know what the exact number is, but it's got to be around 30 or 35% against your remaining money in order just to break even on the 20% loss. So it becomes problematic the greater the loss. But what I'm talking about here, or discussing in this video with you, is the what do you do after that? Not just managing. Oh, I'm gonna get on with it. We have two opportunities a year in order to reboot. If we take a bad hit, or we're feeling bad about our trading, then at the end of that month, we just go, forget everything that happened prior to that, and I'm going to start over again. It's hard to do that on a weekly basis or whatever, because you're just, that's not the way our brains are geared, right? You're pushing on. But at the end of the month, you balance your checkbook, you do all this other stuff to start the new month off. You get a new toothbrush, whatever it is that you're going to do. So a month, as well as the end of the year, the start of the new year, is a good time to say, okay, I'm going to pretend that whatever amount of money that I have in my bank, I'm starting over. I'm starting over. And I'm going to forget about the wins, and I'm going to forget about the losses that came before this. And I'm just going to take my rules and I'm going to apply them, and I'm going to make them work from this point forward. If you're making a lot of errors along in the course of the year, you may be rebooting every other month or whatever. I remember when I was putting this stuff together, I'd go about 3 months, and then I'd step in shit. I would just really cream it and go to the wood. And so about every 3 months, I was rebooting. But it was a good feeling, because you could say, you look back over, what you did, and you say, this is what I did good, and this is what I did not so good. Jesse Livermore said that the only way to really learn trading is to invest your cash, track your results, and learn from your mistakes. It couldn't get any easier than that. But for some reason, instead of recognizing the flaws in our system or in our thinking, we try to say, oh, I'm just not doing that well enough. It's very easy to fall into that if you're trading a system instead of a process. A system is, the confluence of the Bollinger Band and the RSI and the Golden Cross, and it's Tuesday, and I'm all set. That's a system. A process is following a set of rules that are condition-based that result in binary decisions for you along the life cycle of what I call the life cycle of a currency position: entry analysis, position management, and exit methodology. That's what I teach in my fast track course, because it's a methodology. It doesn't rely on systems. You can't abrogate your responsibility as a trader to a system. Either you're going to trade or put your money into an index fund and let it compound at 8% over 20 years. See how that goes and add to that. But don't trade if you're going to watch these videos that folks are putting out and all this stuff and do their systems. Those folks are not using those systems to trade. The ones that are successful are not using those systems. They're using process. It's just that they don't understand the educational process well enough in order for them to be able to backtrack and show you what they're really doing when they are considering the analysis for the entry of a trade or position management or whatever it is that they're doing. They're not relying on moving averages, crossing, or Fibonacci's, or all of these indicators, or something like the London Open. A process is looking for something inherent within the price action, and based on your experience and your knowledge of order flow, you either make a bid-ask decision or you don't. That's simple. But to be looking about engulfing candle patterns, for God's sakes, I took a course from a guy on engulfing candle patterns. And I'm looking at the chart that he's duplicating and saying he's taking this engulfing candle pattern, and I'm identifying 4 others in the chart that he was displaying. Why did he pick the one that he picked? Because the other ones had the very similar characteristics. He didn't pick it because he wasn't using an engulfing candle pattern to make his trades. He had traded long enough and lost enough money that he understood when certain conditions present themselves, that's what you do. And a condition is not an engulfing candle pattern. It indicates perhaps a change in that order flow. But that isn't a trigger. You can't say, oh, I've got an engulfing candle pattern and and then the next candle is the trigger candle if it does this. That's not the way to think. And so if that is the way that you're thinking, then when you're coming down to your reboot, you're looking at that particular methodology, or it's not a methodology, it's a system, and you're trying to figure out why it doesn't work. It doesn't work because it doesn't fucking work. It doesn't have any relevance. It's as stupid. I mean, I don't mean to be rude, but the epitome of a system is using Fibonacci's to tell you something. I got a degree in physics, almost a minor in math, and I'll tell you right now, I've used Fibonacci's before. Fibonacci's are used in complex calculations in physics, and they have nothing, absolutely nothing to do with order flow or currency trading or any kind of trading. So if you're trading using Fibonacci's and you're losing money, and you're convinced that Fibonacci's are what you're supposed to do, you're going to be looking at how, well, the 68 point whatever it is didn't hold, and so the 50% level will hold. It's not going to hold because they're Fibonacci's. The price isn't going to hold because there's nothing to hold it there except the order flow changes. God. And how can a Fibonacci determine order flow? It doesn't. You can't correct something that's wrong inherently to start with. Okay? I'm sorry, but you can't. What you need to do is step back from what you're doing and say, is this reasonable? I did a video on reasonableness in your trading, but that had more to do with the process rather than looking at the market itself. Is this thing reasonable? If you're a Fibonacci believer, step back from the charts and look at where you're placing the fib levels and ask yourself, do these things have anything to do with predictive state or helping you identify levels or anything? You see that somebody will draw these Fibonacci's onto a chart, and it will seem that some of the supply and resistance zones add up to them right on the money. Is that because the resistance or supply zone is a result of the Fibonacci? Or is the Fibonacci simply, from a statistical likelihood, a few of those fib levels are going to line up with the support and resistance lines? That's a statistical probability. Just like, statistically, if you're a male, you're 5'8". Okay? And so what happens when you come out at 6'1", 6 feet 1 inch? Are you an anomaly? No, but you didn't stand to the average, to the fib level. So do you worry about the fib level, or you say, why did you grow a couple inches taller? And what are we going to be able to do with you now that you're 6'1"? You know, are you going to be a plumber crawling through small spaces? Or are you going to be a basketball player? That's how you judge things from a strategic standpoint and from a methodological standpoint, a process standpoint, not through systems. And so if you're going to find the value in rebooting yourself, you know, maybe once a month or 3 months or maybe on a yearly basis, you have to throw everything out, and you have to say, this is what I should be looking at, not what somebody's telling me to look at. I don't tell students what to look at or what to look for. I tell them what to do as a process that's probabilistically sound. 9 yards. So when I got to 2018, I figured I knew, and I did. I knew a lot about currencies, probably more than I should. Well, I did know more than I should. I funded my account with $45,000, and off I went. And in a little over 4 months, 4.5 months, I think, I lost $40,000 of that $45,000. And that really hit me. So wait a minute. Why is this happening? Why did that happen? I'm not stupid. The statistics say that 90% of the traders lose 90% of their money in 90 days. And all this study, and I'm a pretty bright guy, and I lost all that money, 88% of my money, in 4.5 months. Well, what was wrong? How do I go back in and fix the stuff that I'm doing? Well, I had a 33-year career as a software engineer, as I mentioned to you, and we use a thing called the Software Development Lifecycle, the SDLC. It's a methodology to apply against really complex problems to solve those problems. And I thought, gee, why don't I try something like that instead of all this horseshit that I've studied over the last, from 2007 to 2018? Why don't I try that? In 15 minutes. Well, I'm trained for this. Okay, so you might not be able to do it, but I was trained for that. In 15 minutes, I figured out how to map the software development lifecycle down into what I call the lifecycle of a currency position, which consists of 3 phases, which are 3 problems to solve: entry analysis, position management, and exit methodology. Well, that makes great sense. They're sequentially ordered. If that problem is what we call cohesive, I should be able to have 1 rule to solve that problem. If I don't have 1 rule, if I need 2 rules, I need to separate the problem into 2. I know how to do this. So I came up with 3 rules, condition-based, each rule having between 2 and 4 conditions in order to make it work. I slapped that into my live account with my remaining $5,000. And in 4.5 months, I came within $200 of doubling that. So it wasn't changing the systems and shit that I knew. It was stepping back from it and going, holy crap, I need to reboot the whole thing. How am I going to be able to do that? I'm trained to do that. 33 years as a software engineer, degree in physics, almost a minor in math. And I've been involved in, teaching martial arts. I taught martial arts for 55 years. And I've been in 57, 58 years now. But solid 50 years. I mean, I had a school. So I know how to organize things. I know what the educational process. And I looked, using all that, I looked at the education that I had received, and I said, it's wrong. It's incorrect. The information is correct, but there's too much of it. And the information that is out there, none of it is correlated. None of it is in sequential order. None of it is easy. In math, there's a thing called permutations. If I have two objects, how many different ways can I arrange those two objects? You'd think, well, there's two ways. You can arrange it as A and then B, or you can arrange it as B and then A. But they're not. They're four. You can have A alone, you can have B alone, you can have AB, or you can have BA. So if you had two indicators on your chart and you're trying to use those, you'd have four different permutations you could arrange those two indicators in. That's two indicators. If you had five, there's 325 different permutations. It goes up. If you have three, I think it's 19 or 21 or something like that. I forget. I said that in the last video I did. I forget. I don't know. I don't care because I know the principle behind the math. And I said, I can't go in and keep using all this shit. I went through all the information that was out there and I filtered out 30 different pieces of information that I then arranged in sequential order. And that's all the information that I need in order to trade currencies. That's what I teach in my fast track course. It's a 6-week course. I couldn't get done any quicker than that. But because I'm teaching the course and mentoring, it takes that much time. You present a certain amount of money, information from the manual, and you go over that and you try it in live trading. And then we get together on a video conference and we talk. Or if you're local to the area, you come over. I've had a lot of fun with some of the guys that have come over and participated in the courses. That was a long time ago. And that's what the fast track course does. It throws everything out and says, these are the key things that you need to know. Here's the primary ones: entry analysis, position management, exit methodology. Let's look at each one of those. But let's put the emphasis on the entry analysis, because if you don't have a good entry, you're not going to have a position to manage and you're not going to have any position to get out of. So who cares? If you can get your entry right and you have good, solid risk management rules that help you with that, understanding order flow and based on your metrics, what your expectation values are and all that kind of stuff that I work with students on. Then you've got a framework that contains a methodology based on principles. And when you apply those principles within that methodology, you're acting in a process-oriented trading. That's what I call it, process-oriented trading. That's what I teach. And that's sort of what, I mean, you don't need to take my course. If you want to, we can talk about that. Send me an email. Let's discuss this stuff. I'd love to get to know you. We can even have a video conference, no charge. If you got a problem, I can help you solve that problem. So most of the folks that contact me have problems. And I'll say, well, why don't you try this or why don't you do this? But some of them don't have problems. They have process problems. And we talk about it, and I try to lay this stuff out like I'm trying to do in this video. And it's helpful for them, but it's not the full thing of, I mean, you know, when I was young, I wanted to learn how to play a song for my mom on the piano. And the lady next door was very accomplished. She had been on the stage before with a concert level piano. So I wanted to learn how to play Hello Dolly because my mom liked that. So she showed me where to put my finger. She looked, I did the music, and she said, this is a dot here represents this note. And so just remember the dot with the finger that goes there. And over 2 or 3 weeks of coming in every, 3 days a week, I learned how to play Hello Dolly to the point where if somebody was listening to it, they would recognize it. And I learned Twinkle, Twinkle, Little Star and a couple other little songs. So they had us over for dinner, my folks and her and me. And I had a concert and we had dinner and it was great fun. And my mom cried. But could I play piano? No, I could play Hello Dolly. Well, what are you doing in your currency trading? Just because you learned Fibonacci's or this or whatever, and you know where to hit bid ask doesn't mean you know how to trade. You have to learn a process. So if you're going to reboot, if you're going to change and start over with confidence, you have to start over with a process. And a process is something you can fix, a system you can't. So if you get in there, and again, this is taught in the Fast Track program, by my interaction with you. because I'm there. That's the point of the course, is you need a teacher to be there. I'm not just the teacher. You go to high school and they give you an algebra book and they say, okay, come back at the end of the semester, you take the test. You're not going to be able to pass that. You're going to fail it. But you got the book, and that's what you're going to be tested on. You need that teacher so you can ask them questions in real time. So that's why I am the teacher. I have a manual, and it's me. So if you have a process that you're working on and it's a valid process, maybe I can help you put those pieces together so you go, oh, I get it. I mean, a lot of the folks I talk with, they've mostly got 3 years of experience. It's just not 3 or 4 years of trading, and they just don't have they're not as successful as they think that they want to be. But they've got the right idea. Somehow they've been able to put it together. They just don't know how to put the pieces together in the correct order. And so I get on a video conference with them and we talk about it and they go, huh, really? But that's what I do. No, that's not what you do. What you're doing is this, which is very similar to that. But the reason that we walk out in the woods, you've seen me out walking the bow dog out in the woods back there, sometimes we'll have orange vests on because the dumb hunters out there can't tell the difference between a dog and a deer. Because they really don't understand the hunting process. And so in teaching currency trading, in order for somebody to reboot themselves, you got to put an orange vest on so you know exactly the process that you need to look at in order to make the right decisions. That's a bad analogy, I know, but I love making analogies. So if you're one of those folks that's kind of struggling and you'd like to know a little bit more about how you might go about rebooting yourself instead out of the system stuff and into whatever, send me an email. I'd be happy to chat with you and get on a video conference with you. And no pressure to buy any. I don't talk about the fast track course or that I even have a course. I'll tell you how the course is laid out and pull the pieces out of it that I think would be helpful for you, but I'm not pushing you to buy the course. Because it's just me. I don't have time to teach 10 people a month or anything. I choose not to. Most of the time I'm not teaching at all because I'm not finding a lot of people that are serious out there that want to replace their job income. They want to take $500 and run it to $3,000. I don't have any patience or time for you because you're using high leverage and you're using systems. That shit out of your head. And then you can take what you're doing, and maybe it's just a general conference that we've had talking about process and stuff. You can step back from what you're doing and go, is that a process? Am I trading in a process-oriented manner? And they generally, the guys that have the experience will say, no, I'm not. And they might say, hey, can we get on one more conference call? And yeah, we'll get on. And I talk to them or through email or something. They go, this is what I was doing. Where am I failing? And generally, my response to that is, the whole thing's a fucking mess, and you just need to forget everything, and you need to reboot and start over. And say, I don't know how to do that. Well, then you got to take a course. However, most that have that kind of experience, 3, 4, 5 years, are able to say, oh, I see what you're doing. You got to do this before you do that, and then you look at this, and oh, okay, I got it. And then I hear from them later, and 2 years later, and they're going, hey, I thought I'd get a hold of you and say hi, I'm doing great, thanks for your help. As an educator, you can't ask for anything more than that. And as a currency trader who is serious about replacing their job income, or at least coming up significantly impacting the replacement of that job. You're making $60,000 a year, wouldn't it be great to make an extra $20,000? Maybe you don't have enough money in your bank to make $60,000. You're not going to make $60,000 a year on a $30,000 bank. That's 200% on your money. It's not going to happen. So maybe you've got enough money that you could make $20,000. Well, wouldn't $20,000 against a $60,000 income, wouldn't that be great? Wouldn't you take a job at $80,000 over the $60,000 that you're paying? But you don't have to. You can keep that job, which is really good, gives you the $60,000, and then you got $20,000 coming in on the side. That's who I'm interested in working with. somebody who's serious about the currency market as a real, legit, valid market. Not something where you're going to take $500 and double it in 3 weeks. Because at some point, the risk of ruin odds will catch up with you, and you'll lose everything that you made and probably then some, because you'll think, well, this is the way you got to do it. And you'll keep reloading that account, and you'll keep going on, and you'll have lost $30,000, $40,000, $50,000, and you'll give up. Or you'll be one of those unique ones that figures it out for themselves and is able to get going. And that's the situation that a lot of these successful guys are in. They've just lost an enormous amount of money and wiped out accounts so many times that they know what not to do. Jesse Livermore said that, right? The only way that you're going to get successful in your trading is to figure out what not to do. Because once you know what not to do, you know what to do. And guess what happens then? But because they don't understand the educational process, they can't go back and say, these are the real key points that you guys need to understand to get you to where I am. No, they talk about Fibonacci levels and all this voodoo shit because they don't know how to teach it. That doesn't make them bad people, because they're only basing their ability to teach you based on how they view what they're doing. But they're viewing that wrong because they don't have the understanding of an educational framework if they're going to teach. You can't teach currency trading and show and tell on a whiteboard or on a live screen and go, okay, this is the engulfing candle pattern and I'm going to take that. You can't do it. You have to be there. You have to have a teacher to be right there so that you can say, this doesn't look like why are you picking this engulfing candle pattern instead of that one? Oh, it's because the price action is doing blah, 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 blah. And that content of that question will be different for a 54-year-old than it would be for a 24-year-old. And that's where I come in as a mentor, right? So we could talk about that. That's why before I agree to get on a video conference with anybody, I want to know your name, what your job is, your educational background, whether you've traded a live account, basic information about you, because I want to be able to phrase what we're going to be talking about in terms that you can understand as a 34-year-old as opposed to somebody who's 22, right? Because that will give you the ability to say, well, what I'm doing is wrong, therefore I can't fix it because it's wrong inherently. So Peter's saying that I got to step back from it and look at it from a process. And that'll give you the heads up on that. So if you're interested in that, send me an email. I'd be happy to chat with you about it. Peter Rose, Longwood Currency Trading. Have a great day and have a great trading day.